401k loans. How do I go about it? What's the interest rate? Do I have to pay it back? For how long do I have this opportunity? Those questions and more are being answered right about now. So I've gotten a lot of good traction from my webinar related to how to leverage $400,000 from the CARES Act. And majority of the questions that I've gotten have been related to this 401k loan. How do you go about it? Do I have to be a client in order to take one? I'm excited to be able to share my knowledge and information with you. My ask, though, is that you take 30 to 45 minutes on a weekly basis and invest in me in this channel. Subscribe so that you can be notified of the content as it's made available. And most importantly, share. Share this information with as many people as possible. Why? You might be sitting right next to someone who could truly use this information to be able to pull themselves up out of a financial hardship due to this pandemic. The bottom line is we don't know what we don't know. And sometimes sharing a link to a video like mine could make all of the difference. So one of the questions I received is, how do I take a loan if I'm not currently a client? Anyone who has a qualifying employer plan, such as a 401k or 403b, and has suffered an adverse financial consequence as a result of this pandemic is eligible. And as stated earlier, if you would have watched my webinar, I go into detail as to how you qualify. And note, the qualification rule for the loan is identical to that of the penalty-free distribution rule. The account owner, which is you, makes a claim of qualification to the account administrator. Well, who's the account administrator? Well, traditionally, it's the company hired by your employer to manage the day-to-day activity of your retirement account. And in most cases, it's a company like Fidelity, Morgan Stanley, Vanguard, and companies such as that. You declare to your plan administrator that you have suffered an adverse financial consequence and would like to take a personal loan out of your qualified retirement account as it states under the CARES Act. Adverse financial consequences include being subject to a quarantine, like being furloughed, laid off, having businesses closed or work hours reduced, or unable to work due to childcare changes in availability, such as school closings or childcare facilities being closed. The rule also includes anyone who has been diagnosed with COVID-19 or who has a spouse and or a dependent who has been diagnosed with the virus. These loans are not available to those with IRAs or SEP IRA accounts. And for those of you who have previous employer 401k plans, 9 times out of 10, you are not able to take a loan from those 401k accounts because you no longer work for that company. However, some individuals with IRAs, SEP IRAs, and former employer 401k accounts can transfer those funds into a self-directed retirement account. And obviously, that's where I come into play. I would create a self-directed retirement account for you to be able to transfer those qualified funds, penalty-free and tax-free, into a self-directed retirement account for you to be able to use as you see fit. So then you would be able to take that personal loan or take a distribution or whatever the case may be. So in essence, what we would do is roll over your IRA, SEP IRA, your previous employer's 401k plan into a qualified solo K, or also called a self-directed 401k. And then you would be able to take advantage of all of those qualifying rules as a result of the CARES Act. There's plenty of opportunities available to you for those who need access to these funds right now. In short, it's as simple as giving me a call. The next question is, are there taxes due on the loaned amount? This is a penalty-free, tax-free loan, so there are no taxes due as a result of taking these funds. There are no taxes and penalties owed on this loan. And as long as you pay back this loan, this is a penalty-free, tax-free opportunity for you to have access to your retirement dollars right now. So what can I use these funds for? By law, this loan can be used for anything. Any personal financial expense, any business expense such as payroll or rent, a new business startup, any educational expense, or any personal or business purpose that you want. So how long do I have to pay it back? Well, you have 5 years to pay this 401k loan back. And the loan must be paid back in substantially level payments. What does that mean? Weekly, monthly, but at least quarterly. A lump sum payment at the end of the 5-year period is not acceptable. This is not a distribution, and it should not be treated as one. One interesting aspect of this personal loan is if it's used to purchase your primary residence, and that's purchase of your primary residence, not rehab it, not to redo the kitchen or the bathroom. If it's used to purchase your primary residence, you actually have 15 years to be able to pay this loan back. That's 15 years. That's an additional 10 years compared to the original 5. So what's the interest rate? Well, by law, the interest rate to be charged is a commercially reasonable rate. But what does that mean? Well, as interpreted by the Department of Labor and the IRS, it's prime plus 1 or 2%. And at the time of this recording, prime is 3.25%. So that's 4.25 to 5.25% is the interest rate that you would charge yourself on a personal loan. If the loan is used for the purchase of your primary residence, then the rate that you would use is the Federal Home Loan Mortgage corporate rate for conventional fixed mortgages. And I got that out the first time. Now, even though you're paying interest, you're actually paying interest back to your 401k, as opposed to a bank or a credit card company. So how cool is that? Business owners who use a 401k loan to fund their business can expense that interest that they're paying to their 401k. Do you fully understand what that means? That means they can treat the interest that they're paying to their 401k the same as the interest that they would traditionally pay to a bank on a business loan. Doesn't that sound like a double dip? Not only are you able to take advantage of paying yourself the interest back into your 401k, but you're also able to take the tax benefit of expensing the interest. It's pretty amazing. So how many loans can I take? By law, you can take as many loans as you want, provided you don't exceed the total allowable loan amount. So what is the total allowable loan amount? Well, under the CARES Act, it's 100% of what's in the plan up to $100,000. And if you have a co-owner of the plan, if you have a spouse associated with the plan as well, that's a total of $200,000, $100,000 per owner. That's a total of $200,000 that you're actually able to take as a personal loan. Now, if we're talking about a current employer plan, there may be other rules and other restrictions that apply. For instance, current employer plans may only allow you to take one loan per 12-month period. In addition, they may not allow you to take an additional loan until the first loan is paid off. I also know some employers require a loan origination fee, somewhere between a $50 and a $350 fee. The moral of the story here, though, for your employer-based plan, please check with your sponsor and/or administrator, because other rules may apply. But if you have your own self-directed retirement account, you make the rules. So what happens if I don't pay the loan back? Well, any amount not repaid back to the loan will be considered a distribution. And therefore, any taxes and penalties will be then due by the account owner. And who's the account owner? That would be you. You will then owe taxes and penalties. Now, most plans allow for a grace period of one missed payment. But outside of that, the total amount owed will be deemed distributed to you if you miss any of your payments. So what does that mean? You are now liable for both taxes and penalties for the entire distributed amount. Remember, you have to be properly structured. Guidelines have to be followed. Amendments and forms have to be clear to show justification. But the truth is, none of that is a challenge. Why? Because I'm here with you. It's as simple as giving me a call. Simple as reaching out, and I will walk you through this entire process. This is not hard. It's just we don't know what we don't know. If you would like to access up to $400,000 of your money, let's have a conversation. Again, this may not be a viable option for everyone, but for my savvy investors, there's a strong opportunity for you to be able to leverage your money. And for those of you who have been impacted by this pandemic and placed in a tough financial position and have been looking for a little bit of capital to be able to pull yourself out, this might be the way. Or better yet, for those of you who have an investment opportunity that maybe you're looking to take advantage of, but you're missing that injection of capital, this may be an opportunity for you to be able to access that capital on your own, to be able to take advantage of that opportunity without the assistance of a bank or credit cards or putting yourself further into debt to be able to execute. So join me on this journey. I'm Donnell with Self-Directed Investment Strategy. Please like and subscribe. But if there were questions that you have that weren't necessarily answered in this video, please comment below and I will make sure they get addressed. And last but not least, give me a call. Let's have a conversation. Let's dig into some details. In my next video, I will dig into some of the basics that really haven't been covered thus far. For instance, IRAs and 401ks. What makes them different? Why would I want one over the other? And in addition, what makes them self-directed? Like, what are the steps? I'll dig into that next and see you there.